Welcome to this edition of Charting the Markets on this Thursday, the 27th of July. The markets continue to benefit from risk on. We've got money going into equities, which is a fair indicator of people's appetite to take on new opportunities within the market. And this is seen driving new recent highs for some of the major benchmarks around the world, certainly in the Western world, where we've got some interesting lines being broken as we speak on the 24-hour markets on the IG platform, which I'll quickly run through in just a moment. And then on the foreign exchange markets, of course, the backdrop is what's happening with central banks this week. We've already got the Fed very much under our belt. Not really much move on from there other than the expectation that there's potentially another interest rate rise to come. And fundamentally, we're awaiting news, of course, coming through from the European Central Bank today. We'll take a look at the euro-dollar trade and what's happening around that ahead of that interest rate decision. And of course, all tied up with this is this idea that we've got demand potentially increasing for oil, which has seen a little bit of a run up in the oil price, and also interest around gold as we continue to see relative weakness for the US dollar. Let's take a look at indices, and we begin first of all with what's happening here in the London markets with the FTSE 100, which is now seeing some relatively good gains. We've seen over the last few days a market which hasn't really had much direction. Yesterday was quite a bit of volatility, and then today we've got this punch higher. Now, if we close at these levels, it'll be the highest close that we've seen on this market since the 24th of May. And more significantly, having joined this Fibonacci on here, we've now got this market moving up, which indicates to me that the next potential line of resistance, the target if you're long on these markets, is 77.70, which is a 76.4% retracement of this entire move that we've had with that low point we had there back on the 6th of July. So a lot of interest in this market and the market continues to rise. It's not the same sort of picture across the European continent. But what I want to do is I want to move on to what's happening on Wall Street, because the Dow, for me, is one of the more interesting markets to watch. We saw a punch high yesterday to a new multi-month high in the wake of the Federal Reserve interest rate decision. And you can see, having now beaten the highs we saw back on the 21st of April last year, we're now at levels there now not seen since the 9th of February. Now, for me, the next line to watch out for is this 36,950. And if you expand this market out, you can see that that is exactly where we are now moving. And that is a record high. That high we saw back on the 3rd of January 2022 at 36,950. It's a fair distance from where we are, 1,300 points or so. But nonetheless, technically, there's not an awful lot there stopping it. There are those highs that we had back on the 10th of February 2022, but that is only a small move up on from this line we've just broken here, which marks what we're 24.5% up from the lows that we had back in October. This is a tremendous rally, but it's even more accentuated for the S&P 500. But I want to move on in terms of what's happening on the tech-heavy Nasdaq. We've got another day of gains today, and this, after this little bit of a retracement that we've seen, looks to me going back up to these highs that we had, where we had that market moving up on the 19th of July, the high at 15,932. We're 15,660 at the moment, so we've got around about 300 points before we get there. And then it's on to this record high at 16,796. Again, a fair distance to go, but I think if you continue to follow the trend that we've had, and from the lows that we had back in October last year, we're up over half, 52.7% up from the lows. This has been just a small retracement, back in the driving seat on the upside, and your stop goes below recent price action with a view to taking this market up as well. So positivity pretty much across risk assets on the session on this Thursday. Let's take a look at what's happening on the foreign exchange markets. The big news coming late yesterday was that there really wasn't much news actually coming through from the Fed. It's steady as she goes. They do intend to raise interest rates again should the data suggest that that's the right thing to be doing. And certainly at the moment, at least, it looks like inflation remains like it's hanging around. And certainly with the consumer price inflation number nowhere near the Fed's target rate of 2%, we're still expecting the Fed to raise another interest rate round, possibly another 25 basis points. And that then could well be it. So out of this has now seen the focus very much on what's happening with the European Central Bank in a short while. Let me just quickly show you this chart of the euro dollar. Now, the fib I've drawn on here from the low point we had back on the 6th of July, this retracement almost took us down to the 61.8% retracement level 110. Didn't quite get there. The low point we saw just a couple of days ago was 110.21. But let's call that the bottom in this move, bouncing off that line of support. second day in a row of gains as we speak. And I have to say, this is a pre-recorded market at the moment, so it might be a little bit different from the live when it goes out on Charting the Markets. But to be fair, just talking about this move in the market at the moment, just a short while before broadcast, currently trading at 111.33, and as I speak, not much sellers, or if any sellers, in the market at the moment as we push higher. So if you're long on this going into the European Central Bank decision, your stop goes underneath this 110 area with a view to pushing that further on up, back up potentially to the highs at 112.76, which for this market were the highs that we then measure back to the 24th of February 2022. So you can see the euro's performance recently against that weaker US dollar continues to outperform. So this little bit of a retracement now appears to be over. We're on the way up ahead of the European Central Bank decision a little bit later on today. Talking about what's happening with the other markets against the US dollar, this is sterling. 3 very strong, relatively strong days on the way up. This price target of 130 now looks to be easy meat for those that are long on this. If you're long and you have been long and your stop had been underneath recent price action, I'm going to pull that up in order to lock in those profits. Once we get a beat of that psychologically important 130 level, you're then on the way up to the highs that we've seen. Let me just quickly redraw that at 131.42, which are the highs we had back on the Thursday 13th and Friday 14th. Of July. So we're looking there potentially for further gains for sterling against the US dollar. In terms of fundamentals, when we get the Bank of England next meeting on interest rates, it's widely expected we'll see another 25 basis points in the bag, and more possibly after that, maybe another one before they start taking stock. But if you start talking about the potential for inflation to remain around, then obviously there is a potential for further interest rate rises from sterling or the Bank of England, which would help that picture as well. Let's take a look at what's happening with the US dollar against the Japanese yen. Again, losing this Fibonacci here. And of course, this is sort of round the other way, and as much as we got the US dollar falling now against the Japanese yen. And we met that line of resistance at the 61.8% fib retracement, which took us all the way up to that 142.09 level. 4 days in a row now of losses. If you're short on this, going into the Bank of Japan interest rate decision back into last week, this week, where we're not seeing any move from the ultra-loose monetary policy, your stop is around about the 142.50 level, currently trading 139.95, and your price target down here at 137.26. Let's move on to take a look at what's happening with 2 other familiar areas of the market. I want to begin, first of all, with what's going on in the spot gold market. Sometimes, or quite often, inextricably linked with what's going on with the dollar. The dollar's in that form where it's trying to work out which direction it's going to go in. But at the moment, at least, we've got the price of gold on the way up. Not too far away. If we close at these levels, it'll be the highest close that we've seen pretty much since the 17th of May. But we are on the way up. After this little bit of a pullback in what had otherwise been a little bit of a rally that we've seen recently from the lows we had back on the 29th of June. So I think of the longer term picture, you can see, despite the fact we had a new lower low here back on the 29th of June, which in theory should possibly have taken us down to this line of support at 1870, the market wasn't having any of it, and we had that rally out of that. And that rally now looks to be back on. And if you're long at 1980, your first stop-off point is the 2000 level, psychologically important. And then again, there's not much moving on from the very top here, where we saw that market peak out back in May this year at 2082. That would appear at least to be possibly on the cards, especially if you get a candle close beyond this blue line here, this line of resistance at 2000. Let me just finish off very briefly with what's going on in the price of oil, because the 2 factors fighting out oil at the moment, that is demand beginning to look like it possibly could be drying up around some areas of the world because of concerns about recession. Well, that now appears to be over. We've seen the Chinese authorities come back in with support for the economy, which is leading many to believe that there could well be a little bit of an uptick again once you get into the price, or the demand for oil at least, which would send the price up on where we are from here. And of course, this is what's been happening in terms of price action recently. And the fact as well is that we've been warned by the EIA, and warned again and again and again. There's just not enough investment going into oil fields from the big majors. Majors instead are looking at some of the minority, it has to be said, the minority groups that are pressuring these big companies into going into renewables. And their investment has been in things like wind farms and solar and other forms of renewable energy, rather than looking for new oil fields. But let's face it, we do need oil. If we don't get oil coming through in terms of new fields that are being invested in, then there will be further price rises across the board, and especially in times of excess demand, which appears to be where we are at the moment. So let's take a long position on this. If you're long on Brent at 83.13, stop goes underneath the 200-day moving average around about the 81.50 level, with a view to taking that up. Next stop off point, assuming we get a candle close beyond this 82.82, 82.88 rather, which was the high we saw back in 24th of April. Your next stop off point then is the highs that we had back in mid-April at 87.15. That's it for our quick rip around some of the most heavily traded markets on this Thursday, the 27th of July. We are back today at 1:30 p.m. with Beat the Streets, our new regular update on where the US markets could open every week.